Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video trading recap of the trades that we made here today on the membership side of our site. So again, as always, if you're a member at OptionAlpha.com, you get all of these trading alerts and this video real time. But if you're watching this publicly on YouTube, you don't see this video until about 5 to 7 days after we've already sent it out to just our members. So you can't take advantage of these trades without signing up for a trial at OptionAlpha.com. Now today we only had 2 trades that we got filled. I had a lot more orders that were working in the market, but just didn't get a lot of fills. So we are going to go over in detail the opening trade and then the closing trade that we had today in SBUX, which is Starbucks, and then HPQ, which is Hewlett Packard. So let's start off with the closing trade that we had, and that was on HPQ, which is Hewlett Packard. Now originally we had bought the 31.29 debit put spread. So we were hoping that Hewlett Packard would go down, and with the overall market and everything else going down, that's exactly what's happened. So this was an originally 50-50 bet trade. We paid about $1.05 for the whole debit spread, and today we sold it back to the market for $1.40 credit. So we took in a nice profit of $35 per spread that we bought and sold back. Now again, it doesn't seem like a lot per spread, but the whole idea with this particular trade and all of our debit spread trades is that we're staying active. Originally during a low volatility environment when the market was continuing to move higher, it was low volatility, wasn't a lot out there to trade, and we traded originally a 50-50 bet. So we just had made a bet, and I'll go to the chart here so you guys can see it, but we had originally made a bet 50-50 that at some point between now and February expiration or March expiration that Hewlett Packard would trade below 30, which is about where the stock was when we originally entered this trade. Now at this point, Hewlett Packard's gone down considerably. It's gone down almost $2 since we entered that trade. So we have to take money off the table. Originally 50-50 bet. I know I've said it a million times, but this is how you break that cycle of zero-sum game that a lot of people talk about with trading probabilities. By taking the trade off the table, we now turn that originally 50-50 bet into a 100% winner. Now again, we can wait all the way through expiration and try to eke out every single possible gain in this trade, but we made almost 50% of what we could potentially make. The only money that we can make is $95. We made $35 on this trade originally, so we've made a very good chunk of what we could potentially make on this trade. There's no point in holding this trade any longer through expiration, okay? So hopefully you guys are starting to see that more and more as we start taking trades off. All right, let's go to the opening trade, and I want to go through the opening trade here along with the new strategy guide that we have here on OptionAlpha.com, just so you guys can get a feel for how we use it. Now, I won't go over this every time with every trade that we make, but since there's only one trade today, one new opening trade, I felt that it was appropriate to at least use this strategy guide as a basis for understanding how we select different strategies. So hopefully this is really helpful. Again, as always, if you guys have questions or comments as I go through this, add them to the box below the video. So today we sold a vertical call spread, or bought a vertical call spread on SBX, which is Starbucks. For March, we bought the 65 strike calls and then sold the 75 strike calls, taking in a net debit of $540. So we kept this trade size small, only trading one of these spreads, and we just made the spread very wide. So we could have made it a little bit closer, but given where Starbucks was trading right around 70 or so, we made this spread very wide, just reduced our commissions and made it a very nice position size. So how do we come up with this, right? How do we know to buy the vertical call spread versus selling an iron condor or a strangle or straddle or calendar or whatever the case is? Well, let's actually go through our strategy guide and talk about each individual step that we use here at OptionAlpha.com. So inside the strategy guide, you basically have 3 choices or 3 steps that you have to go through for deciding what strategy you want to use. The first is you have to understand what is your directional assumption. So are you bullish, bearish, or neutral on the underlying stock? So let's go to the charts here and we'll take a look at Starbucks. And it's pretty clear which direction you might be leaning towards, but we're leaning towards the bullish side of the market. So we think, hey, you know what? Starbucks has had a really bad rap the last 2.5 months, and we think that it could see some upside gains here, at least in the next couple of weeks, if not the next month and a half. So again, you just have to make your own directional assumption. It doesn't matter what direction you think you're trading, because the strategy guide will help you understand which strategy is good for you at that particular time. But right now, our underlying assumption for this trade is that Starbucks will continue higher. So step 2 of the strategy guide, implied volatility, understanding where the current level of implied volatility is and where the IV rank percentile is. And the question we always ask is implied volatility above or below the 50th percentile? Now again, on your charts, you have a very easy way of taking a look at this. Right now, in the top left-hand corner, and this is a study you can add on all Thinkorswim charts, but we have IV percentile right here clearly labeled for us, and right now it's at 48%. So that fails the IV test, meaning that implied volatility is not high enough above that 50th percentile to be able to trade strategies that take advantage of selling options, so selling premium. Now really the main reason that it's not above that level is because IV has dropped considerably since earnings happened. So earnings usually result in a volatility crush in most stocks, and that's what we've seen here in Starbucks. So now that we have the IV percentile, all we have to do now is choose our strategy. So this is the third and final step of our just very easy 3-step process for how to find out which strategy to trade on this stock. So we go down here below, and we've already narrowed down our direction, which is bullish. If we continue lower here, you'll see that we have other strategies for neutral and even more strategies for bearish direction. But since we are bullish, we then check this off and we work in this row. Now you'll notice that all of the high IV rank strategies are below in this column, or the second column. But again, this isn't the high IV strategy. So we don't want to trade these because implied volatility is not over that magic 50th percentile. So what we're left with here is low IV rank, or under 50th percent, and we have a couple choices. And this is where you just choose the strategy that fits your portfolio best. Do you want to trade a calendar, or a bag spread, or a debit spread, or even some other strategies that you have out there? But in this case, we went out and went after the debit put spread. So it shows you exactly right in the system. It shows you exactly what we're trading. We're trading the debit put spread. We buy one call and we sell one call at a higher strike. Again, it breaks down everything you need to know about trading this strategy, where your risk reward is, what happens with an increase in volatility, time decay, break-even points, the whole 9 yards. So right now we know that this is about the strategy profit loss diagram that we have set up here for our trade in Starbucks. And again, how easy was that? You just answer 3 simple questions. Which direction are you trading, or what's your underlying assumption? Where's implied volatility? And then finally, what strategy do you want to choose? So that's how we got to the strategy we'd like to choose. Again, we'll start to go over these more and more, but this resource is available completely free just to our members. So if you don't have a membership here at optionalpha.com, you want to get access to the strategy guide, I highly suggest you take a look at our free trial. Give us a try for 7 days, see what you guys think. As always, hope you guys enjoy these videos, and happy trading.